Let's dive into beast mode today. We're going to be looking at Ethereum and the Fusaka upgrade that is pending. It's all going to be broken down for you. You don't want to miss it. Let's get into the sponsor, and that is iTrust Capital. This is the place where you guys can begin your whole crypto journey. You can do it in a way that you'll feel much more comfortable in. And that, of course, is getting into a crypto IRA. It's good timing, too, because you're starting to near your year-in position to where you can start adding to your crypto IRA. Always consult your tax advisor out there before you do these things, but you can use our link to get a $100 funding reward just to get started. Try it out. I think you guys might be intrigued with it. And they've been a longtime sponsor of our channel, supporting us. So as you guys know, Fusaka is on the, I guess we'll call it on the beginning of a new era. And what we're talking about here, of course, is the next Ethereum upgrade. If you don't know what that means, well, we thought let's bring in one of the experts out there. And of course, that is Justin Drake to break it all down. Justin, welcome back into the show.
Absolutely. Thanks for having me.
I was on your Twitter account, and I love the description here. The Bitcoin security researcher. That's a good one. I love, you got to keep a little tongue in cheek there, Justin. So this is a good one. Give me a framework of where Fusaka is. Are we on par for getting this done by December 3rd? What are the things we can expect?
Yes, so Fusaka is indeed scheduled for December 3rd, and there's several things that we can expect. The first one is some scalability improvements, most notably for the L2s. We will be increasing by more than a factor of 2 the blob capacity, so that's the data availability, through an upgrade called peer DAS. The DAS stands for Data Availability Sampling. It's some cryptographic magic in order to safely scale the L2s. We also have a bunch of EIPs to help scale the L1. And just a few days ago, we actually increased the gas limit from 45 million to 60 million.
What would be the most important part of Fusaka that we really need to pay attention to, both as ETH enthusiasts, as crypto investors? What makes the most sense for this?
So Fusaka is made out of 9 EIPs, and EIP is an Ethereum improvement proposal. 5 of those are related to scaling, and most notably PeerDAS, that's probably the headliner. We also have 2 other exciting EIPs. The first one has to do with support for a new curve called SecP256R1. This is technical mumbo jumbo for hardware wallets. So we'll have better support for hardware wallets in phones. So that means a more secure user experience. We also have another EIP, which is also technical, called deterministic proposer look ahead. But that basically gives us infrastructure to build pre-confirmations on L1. So today, if you want to do an L1 transaction, you have to wait the 12-second slot. We have pre-confirmations coming, hopefully soon.
So that's even more speed. When you look at this kind of speed, this kind of throughput now with Fusaka, and we'll talk about the next upgrade coming and what that matters. But I'm kind of curious, how does this apply to things like payment systems, whether this is credit card, you could look at Visa, et cetera, that have large throughputs? Does this enable the Web3, the next internet of value, kind of moving in that direction to kind of go at these light speeds now through Fusaka?
Not yet, unfortunately. So the throughput that we have right now is about 2.5 megagas per second, and the average transaction is 100,000 gas. So we're talking about 25 transactions per second, roughly speaking. And there's another issue with payments, which is the 12-second slot is a bit too long from a UX standpoint. So a lot of the payments I expect to happen on the L2s, where they can already support hundreds, if not thousands, of transactions per second, and they have much faster confirmation times on the order of hundreds of milliseconds.
So, so within that, is building on L1s practical? I mean, with those kind of demands, I was just looking at Vitalik's tweet right here. Do you feel like that's going to be the case, or do you feel like L2s are still going to have a large contribution to what's happening on the Ethereum?
Yeah, so my vision for the end game, if you will, is 10 million transactions per second on all of the L2s combined, and 10,000 transactions per second on the L1. So 10,000 transactions per second is a good start for high-value transactions. It's about 0.1 transaction per day per human. So if you're doing a very high-value transaction, maybe once a week or so, the L1 is going to be the place for that. And we're already seeing the L1 being the center for DeFi liquidity. For example, it's where all of the loan origination on Aave happens.
Right. Glamsterdam is the next upgrade. What does Fusaka not do that Glamsterdam will do? Can you give me some insights on this?
So I think for the next few forks, we're going to have a focus on increasing scalability, both for the L2s and for the L1. So it's going to be more of the same. Glamsterdam does have one specific headliner called EPBS, which is a way to remove some of the trust assumptions that we have in the so-called MEV pipeline. So this is just a technical term for the process of taking transactions and forming blocks. Right now, there's a few centralized entities called relays. The idea is to provide infrastructure so that in the worst case, we don't have to rely so much on these relays. And also EPBS, what it gives us is so-called pipelining, which basically buys us a bit more time in order to process transactions, which in and of itself should help with scalability of the L1 as well.
Is that going to open things up for the institutional capital to take a look at Ethereum maybe in some new ways? What would be your analysis of that?
I think a large subset of applications need some form of predictability as to what will happen in the future so that they can start planning ahead for the next few years. My hope is that we can set up automatic gas limit increases at roughly 3x per year. There's a specific proposal from Dankrat, which increases the gas limit automatically over a period of 4 years. So that would be 3 to the power 4, which is roughly a 100x increase. That amount of predictability will allow institutions who are not doing a crazy amount of throughput, not payments, but other lower throughput applications to plan ahead.
So that's going to open it up, I would think, when you look at, like you mentioned, especially on high value transactions. The key there, of course, is if we see mass adoption, so back to your point, scalability, you feel like what's going to happen with Glamsterdam, is that going to be required to see ETH at scale, especially with Wall Street coming into the market at the pace in which they're coming in?
So what I'm hoping can happen is that in addition to the incremental upgrades that we're doing every 6 months now with hard forks, we can start thinking of doing more ambitious things in parallel. And there's this whole effort that I'm involved with called zkEVMs, or snarkification of the L1. And that is a whole new paradigm for processing blockchains, where you verify short mathematical or cryptographic proofs of validity of the blocks as opposed to re-executing transactions. And this opens up orders of magnitude improvements. And you can think of it in some sense as being a parallel track to all core devs ACD, which is what does the incremental upgrades. Quite recently at DevConnect, we did this demo where we showed that real-time proving, meaning the ability to provide a proof at every single block before the next block arrives, is something that can be achieved at L1. And this will lay the foundations for dramatically increasing the gas limit to what I hope we can eventually reach, which is 1 gigagas per second, the 10,000 TPS that I'm hopeful.
I see. I'm looking at ETH proofs here, race to prove Ethereum in real time. Is this similar to what you're talking about right now?
That's exactly it. And you can see here, you have proofs arriving in real time for every single slot. The proofs are being downloaded in your browser and verified locally. And what you should imagine is a very weak device, for example, a phone or a laptop, being able to process every single Ethereum block, even if the gas limit is extremely large.
So based on this, would this be a threat to Solana or even Sui in terms of how they're managing transactions versus what you're talking about now?
Yeah, so Solana processes on average 1,000 user transactions per second. What I'm hoping we can do is 10,000 transactions per second. So 10 times Solana over a period of 6 years, incrementally increasing 3x per year. But I think the real challenge with Solana is that it's going to hit a bottleneck with its monolithic approach. You can only process so many transactions on a single server. You have to scale horizontally. And this is what blobs and data rate desampling is all about.
Yeah, for sure. What's more important right now in terms of velocity versus volume? What would you say?
You mean in the context of stablecoins?
Yeah, stablecoin velocity versus volume.
I mean, I think both metrics are very important, but one is easier to fake than the other. So if you have free transactions, it's very easy to fake velocity. On the other hand, total value locked is something that's very, very hard to fake. And here's a very striking statistic. There's $100 billion of USDT, so Tether, on Ethereum. There's $2 billion on Solana. So there's a 50x delta there. And that really shows that there's very strong network effects on Ethereum for stablecoins and virtually none for Solana.
Why are we seeing this then? What the chart I'm showing you right here is just the ability for Solana to outpace most of the rest of the market in terms of stablecoin movement right now. Is this what you're talking about?
So I'm talking about total value locked, which is...
All right, versus transactions.
Yes, transactions can be essentially faked when you have free transactions. So you can take $1 million and you can just keep rotating them ad infinitum, and that will pump your numbers. And Solana has a history of pumping numbers with.
Wait a minute, you're saying that this is being faked right now?
It could be. There have been cases over the years where provably Solana was faking its numbers. I haven't looked personally into the most recent ones, but I wouldn't be surprised if those are indeed faked.
All right, we got to talk about security, also the scenario and attack vector that could be coming from China. China is doubling down on crypto ban now after some new activity. They're probably going to continue to go in after Bitcoin in the coming years. What is your assessment of this in terms of a nation state starting to decide, hey, we're not going the route, we've gone the route of gold as our asset. Obviously, the United States has gone the route of digital assets, especially with the Genius Act in play. What would you say could be a problem here? Yeah,
so the fundamental problem is that when you zoom out, Bitcoin is not secure against the most powerful nation states. And the reason is that the total budget to permanently 51% attack Bitcoin is on the order of $10 billion and on the order of 10 gigawatts of power. Now, if you look at China specifically, just in 2024, they deployed 200 gigawatts of solar. And so that's 20x the amount of power to attack Bitcoin. And for them, $10 billion is nothing. It's less than 10% of their annual defense budget. Now, why would China be interested in attacking Bitcoin? Well, part of the reason is that they are structurally short Bitcoin, right? They've prevented their population from holding Bitcoin, from trading it, etc. And so the rest of the world stands to gain relative to China. And so in some sense, China has an incentive, if Bitcoin were to become successful, to go attack it.
I see. Okay. And I think that's the thing. You got to look at the attack vectors. Obviously, China has gone the route of gold. This, of course, is one of the contention issues that we're faced right now. But with your attack vector thesis, you're looking at someone like a BlackRock, most of Wall Street all investing in terms of ETFs and Bitcoin. You've got Strategy, which is doubling down and continuing to reposition, now holding, I think, 3%, on track for over the next decade to possibly hold 5% of Bitcoin. And that's with some of the Bitcoin scenarios that play out in terms of people losing their keys, that would never be achieved again. So it starts to reduce the amount. Would that not position at least mostly the U.S. in a position of defense against what potentially could happen here with China?
Yeah, so you could imagine potentially the US government stepping in with its military potentially to go defend Bitcoin. But in my opinion, that means that Bitcoin has lost its neutrality. It's no longer a credibly neutral global money. It's a US money at that point.
Right. Yeah.
Now, one of the things that we've seen with ETFs and Saylor and the like is a dramatic decrease in transactions on the Bitcoin chain, which has led to a dramatic decrease in transaction fees. So yesterday, we saw 2 Bitcoin of transaction fees, which is definitely not enough to go secure Bitcoin. And the issuance is decaying exponentially. It's about 200 times larger than fees. So fees represent only 0.5%. Unless fees grow dramatically over the next 10 years, I don't see how Bitcoin can secure itself with 2 Bitcoin per day.
Yeah, well, that's on the current status. Obviously, I'm not arguing for or against, but if you look at market demand right now, which has been, I would say, moderate at best, because we haven't really seen a market blow off top, and definitely not Wall Street jumping in outside the ETFs. Would market demand not increase that capacity in terms of throughput?
Yes, so the transaction fees are at a 15-year low. Now, what tends to happen, you're right, is that during bull markets, there's more interest and therefore transaction fees go up. But Bitcoin needs to be secure even in bear markets. And another observation is that as the price of Bitcoin increases, it's harder and harder to generate BTC denominated fees. And so what I expect will happen is actually the 2 Bitcoin per day to decrease over time if the price of Bitcoin were to increase. And one of the theses was that transaction fees are going to replace issuance for after every successive halvening. But what we're seeing is that the transaction fees are halvening faster than issuance, meaning that BTC transaction fees are decreasing more than a factor of 2 every 4 years.
Interesting. All right. Well, you take that and you also look at quantum. And I know many people would say, I don't know if quantum is even, yes, a lot of people would say, yes, there are AI advancements that we've seen, but now quantum potentially could be powerful enough in a few years. Some people say this could happen even faster with the acceleration of it. What do you think? Do you think this is a risk right now?
So my date is 2032 for when we'll have a cryptographically relevant quantum computer, basically a quantum computer that can break our cryptography. So we have 7 years roughly to upgrade. I do think it's a threat, and I think it's more of a threat to chains that can't upgrade easily. For example, Bitcoin. Ethereum has a whole R&D process that has been in operation for several years. I think we're the number one in the market in terms of potential solutions. I am a little bit worried about Bitcoin specifically because it's not just a technical problem, it's also a social one. The reason is that a very large fraction of the Bitcoin keys have been lost. And so if you take Satoshi's coins, that represents about 5% of the circulating supply. Yeah. The community is in a conundrum. Either they let quantum computers steal those 1 million coins, in which case that's very problematic for global money, or they will burn Satoshi's coins, but that's also problematic because Bitcoin is meant to represent strong property rights.
If it is capable, it would go after a lot of these dormant wallets that are either untouched or incapacitated right now, which could present a big issue. Because that's a lot of Bitcoiners kind of argue that's lost coin that will never be recovered unless we were to see a true quantum cryptographic solution in play. So interesting analysis there. Beyond that, I want to go to a couple other points right now. This, of course, is in general, when you kind of look at why are we only seeing, first of all, we only see a couple of stage 2s, most everything stage 1. Why only stage 2 L2s in terms of decentralized L2s?
Right. So building a stage 2 L2 is very difficult because you're putting a lot of pressure on the so-called proof system. So either that's a fraud-proof game in the case of optimistic rollups, or it's a snark in the case of a ZK rollup. If there's bugs in these systems, which there are, then stage 2 rollups are arguably more exposed from a security standpoint than other rollups, stage 1 and stage 0, that can lean more aggressively on their security counsels. Now, we have this proposal called native rollups, which addresses the core of the problem, which is the bugs in these proof systems. And it basically allows you to inherit the same proof system as the L1. So you have an exact copy of the EVM, And if the L1 is secure, then your L2 will also be secure, and you won't need a security council to intervene in case of a bug. And you also won't need governance in order to stay in sync with the L1 every time the L1 does a hard fork, which changes the EVM.
Yeah, yeah. I'm looking at the two champions of the markets right now. When it comes to what most investors are looking at, you look at Tom Lee. You know, I would say he is pretty much the Ethereum champion out there, even though he's also a Bitcoin, I won't say, he's a Bitcoin investor, but he also has made many calls around Bitcoin. Then you have Michael Saylor, who is just, you know, always on Bitcoin, never ending Bitcoin. Which one do you think does a better job in terms of getting the masses educated on how to invest in crypto in general? If you had to pick one.
Yeah, I mean, I would obviously pick Tom Lee. I think the thing with Michael Saylor is that he is very narrow-minded in the sense that he's only looking at one thing, which is Bitcoin. And within Bitcoin, he's only talking about the good things. You never see him talking about the security issue. You never really see him talking about quantum. On the other hand, you know, Tom Lee, as you said, he came first from Bitcoin. That in of itself shows some openness.
Yeah, yeah. Well, I would agree with that. I think the fact that he has looked at, you know, two variations of crypto, has started to make his way onto the Ethereum ecosystem, obviously with what he's doing with BMNR for sure.
I've publicly challenged Michael Saylor several times to have an open debate on Bitcoin security. He has every time ignored me, and so I'm hoping to use this show to again reiterate that I'd like to debate him on what is, in my opinion, the number one issue in the long-term survival of Ethereum, of Bitcoin L1.
Okay, well, there you go. Another challenge coming in from the Ethereum Foundation with Justin Drake there. Michael Saylor, hopefully, if you're listening, we'll be happy to host that too. You know, if you guys want to bring it on here or co-host it with another pro-Bitcoiner, you know, someone like a Mark Moss. I mean, he's very friendly with our network. There's several out there that I think would easily jump at this. So that would be a possibility. Saylor, if you're listening, hopefully you'll take us up on that. Hey, Justin, I want to talk about, you're mentioning security, and this is another thing that we continue to look at other chains out there that claim to have large amounts of security. One of them, because of most recent, is Cardano. Can you give me any insight to what's happening over there?
I don't follow Cardano. Like, all I know is that they had a consensus bug recently, which caused a chain split. That's all I know.
One other question before we get you out of here, and that, of course, the last time we saw an upgrade, Pectra, there was the kind of market move that we experienced. Obviously, ETH is now depressed slightly based on where we are on market condition. What's your anticipation, or do you have an anticipation of how ETH might move based on Fusaka releasing this week?
What I have found as a researcher over the last 8 years is that in the short term, my work and various upgrades or various announcements have no significant impact on the market. What gives me, you know, solace, I guess, is that over long periods of time, over 5-10 years, we're trying to build something that's extremely meaningful. And my thesis is that blockchains are winner take most, and that Ethereum is in a position to gobble up all the Internet of Value.
There you go. I like that one, winner take most. Justin, it's been great having you back on to get an update on this as we start to see the upgrade go in play with Fusaka and going into the next one being Glamsterdam. We'll be watching your work very closely. So thanks for coming in today. We appreciate it.
Thank you, Paul.
All right, guys, you know what to do. If you're not in our own private member group, that's the Bear Market Edge. I drop an email each week. You can join. It's absolutely free. We do free research over there, insights. We cover a lot of the different projects that are out there, including a variety of what's happening, whether it's ETH, Bitcoin, Solana, SWI, you name it. We're looking at all the tech moving in the space. Make sure and subscribe. We'll leave a link down below. You know what to do. Follow me on X @PaulBaron. We'll catch you next time right here on The Paul Baron Show.